Yes, we feel very pleased with the results of this quarter with 8% growth and also very strong earnings with 26.5 EBIT margin. But especially we feel very pleased about the how and the resilience and the strength of this number with growth on 4 of the 5 business divisions, with growth from volume and growth from price, as you so nicely said, with double-digit growth in emerging geographies. We see this as another proof point of the strength of our strategy, of the continuity of the proof point of what we've been saying, the value and the resilience of our offering, the value of the diversified product mix. And we are in a good place, in a place of comfort, on delivering to the year-end guidance, and in a place of comfort also moving firmly and swiftly in getting closure and delivering on the promises that we made of putting these two amazing companies together, either in Q4 or in Q1 next year.
In terms of those benefits of that combination of those two companies as well, and the margin environment, which has been so very, very tough for so many parts of the industry as well, just you want to tell us about the achievement of your initial targets and how the margin environment has been so challenging and actually now is improving the situation perhaps?
Yeah, we have been in the last quarters, every quarter sequentially driving gross margin expansion versus the previous margin. This is the first quarter that we are relatively flattish versus the same quarter last year. And we full right on track on delivering on our promises of a flattish gross margin relative to last year. We see the positive momentum on pricing. We see the continued impact of productivity, and especially the demand from our solutions that give us the leverage and the stronger denominator. We also see the peak of the raw materials and energy behind us. So we are, again, showing one quarter after the other that we're delivering on our promises, that we're walking the talk, and then on the trust that we're going to be a margin expansion next year.
We were just looking at Unilever numbers this morning, and the reality is that there's still price growth, but it's about half the price growth same time a year ago. How are you thinking about the ability to stretch out prices at this point in the cycle, and what are the limiting factors here? Are you getting any customer pushback?
Yeah, we have extraordinary conversations with our customers across all segments, not only in food, but energy, in animal, across all areas, and on pricing and on value. I mean, we never price cost, we always price on value. We see a pull and a continued demand from our solutions in the world that we live, either by healthier nutrients, either by more sustainable agricultural, either by more sustainable fuels or alternatives that enable the world to continue to move ahead. And we see so far with the 6% of the contribution that we see year to date on pricing, more or less evenly across all the divisions, but maybe household care, the one which is coming later, especially for the dynamics and the longer contracts. But again, very, very good conversations with the customers, and we see the pricing continue to stay as a driver of growth for Novozymes in the future.
Can I ask you about grain and tech processing? Because it's been a very difficult environment as we take a look at food prices. Big quarters of the world struggling to pay for the escalation that we're seeing. There's a lot of geopolitical uncertainty now at this stage. What are you seeing in terms of any of this touching the sides of the business?
Yeah, in grain and tech, you've seen a decline it's the only segment that we declining this quarter, and also we see the decline year to date. The decline that we see in grain and tech is for two drivers. One-off, that we don't sell enzymes anymore for COVID testing, and actually we're pleased with that lack of demand for what it means for the world. But it's a driver of a decline relative to last year. And then we see softness in textile with a lower overall demand especially in China for our solutions. And as you so nicely mentioned, also in grain particularly, maybe the level of destocking that we've seen already behind us in food, it's a little bit later going in grain, being even further downstream in the value chain. But the pull from the value from our solutions for higher yields, higher efficiencies, lower energy, maximizing the value of those amino acids, those sugars on the precious raw materials, that continues to be very strong. But yes, in a very volatile demand market with many moving pieces, as mentioned.